will go anywhere.
Okay, all right. Nilesh, briefly spoke about PB Fintech. Mayuresh, what's your view on that? From the highs, it's seen a sharp decline in terms of valuations. But from this new age theme, do you like PB Fintech?
Afternoon, Nigel. I think we're a little bit on the sidelines when all these new age companies are concerned, Nigel. I think at the time of listing and the huge momentum and the tailwinds that they carried, it was not sustainable. And I think as valuations are coming off quite significantly, a lot of supply coming in a lot of these stocks as well. And I think the larger issue that probably lies for the larger universe is how the bottom line growth will be. First, for a few companies, there has to be some amount of profitability that has to be exhibited. For a few more, I think consistency in those numbers have to probably come through for better multiples to be probably levied in terms of either FY24 or FY25 numbers. So having a look at all this and on the OD lens, I think both the EPS RS rating is very, very weak at this point of time. At some point, they will bounce back, Nigel, but our own sense is that there are better sectors and stocks to probably look at this point.
Are you looking at the railway stocks, Mayuresh? I mean, we've been talking about how they've moved, and the last few minutes have been crazy for them. RVNL, Railtel, Aircon, you name anything, all of them are doing well.
Oh, absolutely, Mangalam. I think it's both an impetus in terms of capital spending expected by the government over the next few quarters, and the large expectations in terms of a decent chunk probably coming to the railways as well. We've already seen decent announcements that have come through, both in terms of Vande Bharat trains. You're probably looking at more improvements happening as far as the railway infrastructure is concerned as well. You're probably looking at signaling, so on and so forth. They're also probably looking at more metro rails, wagons, so on and so forth being ordered at this point of time. So I think a combination in terms of the order flows that are expected for these railway companies, the expectations in terms of existing order books giving good revenue visibility over the next few quarters and years, the new orders coming with better margins, and because of the strict timelines, the kind of working capital constraints that they used to face earlier, I think would come off, and the projects are better margin projects as well, which means better operating leverage for a lot of these companies under focus as well. So yeah, I think tremendous momentum for these stocks as well. But also keep in focus, I think what we're liking as a sub-segment, Mangalam, and this is the bearing stocks. Have a look at the bearing space itself. I think not only does it provide to railways, to wagon makers, which are going to be significant for the next few quarters, but even industrial applications are huge. The industry size itself expected to double from 1.8 billion to almost 3.6 odd billion. And the large expectations in terms of input costs coming off will mean margin expansion for a few of these bearing stocks, which are closely related to railway companies as well. So Timken, SKF India can be something that can be kept on the front lines.
Take that point, Mayuresh. Thank you for joining in and giving us a view on a whole host of stocks. We bring back Mitesh in because a lot of stocks are actually doing well in an otherwise wobbly market. The Nifty is just about 10